Good morning, everyone. So, welcome back to another session of unit banking. In this video, we are going to particularly talk about the demerits of unit banking, and this video is an again continuation with the previous two videos in which we discussed. We took the topics like meaning and definition of unit banking, and that we understood the concept of unit banking. Unit banking is all about what, right? And then in the second video, we discussed about the various merits or advantages which are enjoyed the unit banking. So in this particular video, we are going to wind up the concept of unit banking with the demerits as such. So first we'll take up the summary of the various demerits, and then as per the tradition, one by one we'll be discussing all the demerits. This is the summary of the various demerits that are faced by the unit banking, or we can say these are few of the demerits that are faced by the unit banking. Since unit banking concept is not preferably accepted in India, but then also it is important to understand various demerits which are faced by the unit banking. Let me remind you once again that whatever the demerits are faced by the unit banking as a concept, right, these all are the merits, because we have already defined, we have already understood that the branch banking as a concept and unit banking as a concept are two sides of the same coin. They are exactly opposite to one another. All the merits of unit banking are exactly the demerits, can be termed as the demerit for branch banking, and all the demerit of unit banking can be understood as the merit of branch banking. So these are, if we talk about, these are the lack of economies of large scale because of single unit. So there are no economies of large scale or advantages of economies of large scale which are enjoyed by the branch banking, but on the other part, unit banking faces the limitations for it, right? Another point is more cash reserve is required because of the single and the small areas, because of the one branch only or one office only, high cost of operation, then high risk bearing because no diversification of risk is possible because there are no branches, right? There is only one branch, one unit, one single office, limited staff, so diversification cannot be possible. Another set of demerits are like lack of mobility of fund. It does not provide the complete banking structure because there is only one single unit. Other than that, the various areas, the various problems of supervision by central bank, because every unit bank cannot be intervened, cannot be supervised by the central bank itself. Another point that we can understood as a limitation or demerit of unit banking can be the costly remittance of funds, because exactly the same way, because there are no multiple branches, so transferring or remitting money or funds from one place to another, because they need to go jointly with another banks, or they need to have a tie-up sort of, or they need to enter into a separate agreement as far as the remittances of funds are concerned. So every time, every single transaction will be giving them the or charging them with the extra money. And again, the most important point is the local pressure. So local pressure is kind of localization of needs are there, so both ways it works. So it can be on the advantages side also, it can be on the disadvantages, because a limited customer base, if they're not happy with the services, if there is a negative outfit, if there is a negative thing that has been occupied with that particular unit bank, so the entire banking will be a failure sort of. And if the customers are satisfied, it will be of the great privilege then. So local pressures, because of the local pressure, there are other things that unit banking has to face. So now coming one by one to each and every point, we should start with the lack of the economies of large scale. So what we mean by economies of large scale, because having multiple branches, having large number of customer base, and it is obvious that as per the concept of economies of large scale, the bigger branches, the large number of branches faces an advantageous position on that. So unit banking, though they are only operating on these very small scale, are deprived of various economies of large scale operations or the various advantages that can be provided by having multiple branches. At the same time, these unit banking faces the lack of economies of large scale positions, lack of large scale advantages, whereas these branch banking, because of multiple branches, they enjoyed the economies of large scale in terms of sales, in terms of operations and everything. Second point is more cash reserves are required. So if we compare branch banking with the unit system, the banks operating under unit banking must have more cash reserve, because as and when they are lending in the form of loans to their customers, in order to maintain the liquidity, they need to have their own cash reserves. So more cash reserves are required by unit banking. But in case of when we talk about the unit banking or branch banking, specifically when we talk about branch banking, so there are things like, if one of the branches doing good in the lending and advances, so as a bank they need to manage the cash reserves. So it is the jointly we can say that the bank is maintaining, not individual branches are maintaining the cash reserves, right? So this is one point that we need to understand. Then again, high cost of operations. In case of branch banking system, the remittance of funds from one place to another is of greater ease actually, and at a lower cost than unit banking, because the multiple branches are there. They can help us, or they can help the other branches in order to carry forward these kind of operations, whether they are the remittance facilities, the kind of when one branch is requiring more employees, so people can be from other branches can be sent on deputation to other branches as per the requirement, as per the walk-in facilities and these kind of things. Now, next point is high risk bearing. High risk bearing because unit banking is working and they are highly localized and they are working in the closed area or closed geographical area sort of. So any adverse condition in that particular business or in that particular locality, in that particular area, will severely and strictly affect the bank. So risk cannot be diversified, which is present there in case of branch banking. If one area is not performing good, or simply we can say one of the branches not performing good because of anything, because any local calamity has there, natural calamity has occurred, or any taste and preferences has changed because of the seasonal fluctuations, anything, depending upon the case to case. If one of the or few of the branches are not performing good, the other branch, the entire bank is backed up by the other branches as well, right? So the banks under unit banking system cannot withstand greater shocks or serious crisis because of the one unit, the rigid local area, their geographical reach, limited geographical reach. Again, the unit banking faces lack of mobility of funds because the entire concentration of funds is at one region, one area, one geographical area, particularly talking about. So there is no possibility of movements of funds between the region and localities, resulting in the different interest rate at different places. So this is one thing that we can understand, that mobility of funds is concentrated towards one area, one region or one geographical region only. Another point is that unit bank does not provide the complete banking services. Complete banking services in case like, say for example, if unit banking has been surrounded by the agricultural areas, so they'll be going for much on the part of the agricultural product, but industrial products, industrial loan, term projects financing and project financing and industrial or the facilities like overdraft on the industry, on the trade, will not be successfully running in that particular. So they'll be avoiding all those products and services. Similarly, if the unit banking is situated near to the factories, near to business nature transactions are there, so they'll be lacking the agricultural product, they'll be lacking other areas as well. Like, so these are few of the things. Also, the problem of supervision by the central bank, because say for example, the central bank, they are having an eye on the bank, not every branch, right? So how actually this point of supervision is different, and we need to understand in that particular sense. It becomes very difficult to supervise each and every bank operating under unit banking system. here I am quoting, each and every bank will be difficult to supervise by the central banking. But if there are only few banks but with multiple branches, so in case India, how it is different in case we talk about India in case of branch banking. So RBI is regulating and having a control and supervising the affairs of the HDFC or ICICI or any other bank. Now there are two types of audits. One is the external audit, which is done by RBI. Another is the internal audit. But these are carried out by the internal team of the or quality assurance cell or internal team of the HDFC bank or ICICI bank or that particular branch banking, right? But it will be, on the contrary, will be very difficult for the central banking institution or central bank to visit every bank. So in that particular case, if there are many banks, many unit banks, because unit banking follows the every bank is having different management, different ownership, and they are having different legal existence in the eye of law. So central banking system has to follow, it becomes really typical for them to supervise each individual entity. But this is not a kind of disadvantage in case of branch banking, because they are just focusing on the bank, and banks are submitting the internal audit reports to RBI. So RBI or central banking just need to focus on the bank, and they can view as a sample. They can go in different branches, but they need not to cover every single branch. But in unit banking, since every unit banking is different in identity, therefore it is mandatory for them to go and inspect and supervise each bank. So there is a problem of supervision by central bank. Then again, the costly remittance of funds, as unit bank does not have any branches at other places. So if a customer needs to have their extension of services from one place to another, so remittance of funds is typical in case of unit banking, and taking other services at another geographical areas, it also becomes typical. So unit banking follows another type of banking system that is known as correspondent banking system. So they need to enter into different kind of agreement and contract with another unit banking, so that they build up a consensus. They are having an agreement or contract sort of, whereby they are just exchanging their mutual services and mutual functions. So every transaction will be they are being charged by the another banks in both ways, right? So as a result, it has to happen upon correspondent banks for transfer of funds from one place to another. They are getting the services, but they're costly affair, and they're being charged by the bank. The local pressures and the undesirable competition. Local pressure means because these banks are highly localized in their business, and if the local pressure and interferences generally disturb their normal functioning, and if the customers are not satisfied, that will ruin the entire image, the acceptability of the banking products and services, and that can be negatively on a large scale will be affecting the goodwill as well as the profitability of the unit banking. But in case of branch banking, it can be set off, because few branches, maybe because of anything, if they are not performing good, they can be backed up by the other branches which are doing good. So this is one aspect. Another is that undesirable competition. Undesirable competition in the sense because they are independently run by different management, different ownerships are there. This will result in undesirable competition among the different unit bank, because each unit bank is a different entity in the eye of law, and the owners are different. So this will have a close competition and neck to neck competition among the various banks. So all these demerits are the merits for the branch banking, and in the next coming videos we will be discussing about the branch banking as a concept, meaning and definition, and various merits and demerits. With these words, thank you everyone. Thank you so much.